You don't need 10 strategies to be able to make it in this industry. You just need to master this setup right here and you'll be set for life. I've been trading for the past 5 years, and in the last 4 years, I've been using this same strategy to catch beautiful trades. In this video, I'm going to show you all the trades that I've taken using this setup right here. And guess what? I'm going to break down this setup step by step. All right. So make sure you watch to the very end as I show you everything step by step right here. All right. So what you're looking at right now is a bullish scenario of our A plus setup. And this is what we want to see before we take any particular trade right here. So you can see that we have a QML with the low, with higher and break of structure. We have equal lows which are left behind. And then guess what happens? The market comes and takes out the liquidity right here, and then also takes out the Asian session. By the way, I don't take any trades before the Asian session is taken out. I always wait for the Asian session to be taken out. And if you can do that, you're going to eliminate most of your losses. So just wait for the Asian session to be taken out, and then you make a decision after that. All right. So it's really important. So what I have to do is that I have to go to the lower time frame right here, find my order block. And once I do that, I just wait for the market to pull back into this area. And in terms of entries, there are two types of entries that I use. There are what we call aggressive entries, and there is what we call a confirmatory entry. So an aggressive entry is where once the market comes to your level, once the market shows you signs of bullish reversal, for example, like a bullish engulfing pattern or a pin bar, you jump in, right? That's an aggressive entry. Then the other type is the confirmatory entry, where you wait for the change of character on the lower time frame. So whatever you're comfortable with, use that. But they all have advantages and disadvantages. For example, the aggressive entry, you're prone to fake outs, all right. And then for the other one, that the disadvantage is that the market sometimes never returns. So the market can just tap into the zone and push to the upside. And guess what? You'd have missed out because you didn't take the action. So for me, I like to use aggressive entry and then quickly go to break even. Thereby, if the market has to actually go against me, I'll end up with a break even trade than a loss. So whatever you're comfortable with, do that by all means, right? So I'm going to show you some of the trades that we've taken using this strategy right here. And what you're going to notice is that these setups look exactly the same. It's because they are the same. I've been using this strategy, like I said, for the past 4 years, and it's been amazing. All right, so let me just show you some of the examples right here. So one thing I'm going to tell you is that this strategy doesn't matter whether you're trading currencies, whether you're trading stocks, whether you're trading crypto, whether you're trading boom and crash, and all those synthetic indices. This strategy actually works. All right. So look at this. Very similar things right here. So you have a drop, you have a base and a rally, multiple break of structure. And remember, you have to be trading in the direction of the major trend always. So you have drop a strategy, then the market goes to the upside, break of structure, then you have liquidity always. So wait for some sort of liquidity. It can be equal lows, equal highs, trend line, whatever it is, make sure there is, right? Like I said, the Asian session is here. So this blue box right here is the Asian session. So always I wait for this to be taken out. And once it has been taken out, guess what? Boom. The market goes like 1 to 15 risk to reward ratio, just like that. Amazing. So beautiful setup right there. Then our trade was on GBP card right here. Nice drop a strategy, multiple break of structures to the upside. Nice liquidity which was left behind right here. This market comes with big momentum candles, taking out those liquidity right there. And then guess what happens? The market, just like that, goes to the upside over 1 to 10 risk to reward ratio. This was on Euro NZD. A beautiful trade right here. We have a drop a strategy. We got multiple break of structures. We got also liquidity right here. Then the market eventually comes to our zone, and then just look at the kind of candles that push this to the upside. Just amazing, right? So this is like a 1 to 16 risk to reward ratio. Our risk to reward ratio is just crazy, guys. Look at this USD JPY. Drop a strategy, multiple break of structures to the upside, liquidity, the market comes into this area. This is the Asian session right here. The market comes into our level, we execute, and then the market does what? The market just pushes to the upside right here in a very beautiful way. And then we get a win, right? Then we have NZD Swiss right here, drop a strategy. We have liquidity. The market comes into our level. We wait for that candle. we push full TP over 1 to 10 risk reward ratio. And by the way, I don't take any trades that gives me anything less than 1 to 10 risk reward ratio. Nothing. So this is how it is. Drop base rally on gold, then break of structure, nice liquidity. Market takes out the Asian session, and then just look at that. The market just goes to the upside like that, right? And then we have this beautiful trade on GBP USD, drop base rally, break of structure, Asian session. The market beautifully comes to take out the Asian session, and then it goes all the way to our take profit. Just amazing. Just amazing. This is Nasdaq right here, drop base rally, break of structure. The market comes and actually takes out the Asian session. Then guess what? Goes all the way to full take profit right there. Just amazing, guys. Then we have GBP USD, drop a rally, break of structure. We have in Asian session and also liquidity right here. The market beautifully takes out that and then comes into our zone, and then off we go. Over 10 risk reward ratio, all our trades. We have a drop a rally, break of structure, we have liquidity plus Asian session. The market taps into our zone, and off we go. Nice. Very, very nice. Then we have gold. Gold is one of my favorite trades to pay to actually trade. This is a nice drop a strategy, break of structure. The market comes, takes out the face zone, and then we get out, we get in from there. Then the market goes all the way to take profit because the Asian session was taken out, right? So after that, we had a nice GBP USD trade, very very on the lower time frame. But we had the market tapping on the lower time frame. I mean, on the higher time frame, supply demand zone right there. So once the market touched into this area, I just waited for the market to retrace, which is a confirmed to entry. The market it eventually decides to come to this level, and then we catch this beautiful trade all the way to the upside. Guys, I have hundreds of screenshots, like hundreds of screenshots of this setup working. The reason why I'm showing you all these wins right here is for you to be able to have it in your mind, in order for you to actually get that concept that this strategy actually works, and then so that you can also do your own back testing and see it for yourself. By doing this, you are reinforcing the confidence in the strategy, and then guess what, you'll be able to take this setup regardless of the previous outcome, because you know for a fact that this strategy actually works. And that's the reason why I'm trying to show you all this right here. We have a nice drop base rally, we got multiple break of structures, we got liquidity, we got the Asian system which was taken out. The market comes into my zone, we execute off to the upside, right? Just amazing. Just amazing. This is the setup right here. So you've seen, like, I can show you a number of trades, I can show you a number of screenshots, but I hope that is actually okay. That is actually enough to prove that this actually works. Like, this is what we do on a consistent. If you follow me on Facebook, on Instagram, and other social media platform, we post this like on a consistent basis. So it's really really interesting to see. All I'm doing is just waiting for the agencies to be taken out, and then trade in the direction of the market, and that's it. If the market goes my direction, well and good. If it doesn't, guess what? Losses are normal. We take losses as well. But the good part about our strategy is that losses are small. We take very, very small stop losses, and then our wins are 10, 15 times more because we have a good risk reward ratio. And that's one thing we pride ourselves in: good risk reward ratio, such that even if I lost 7 out of 10 trades, those 3 trades I'm going to win, they're going to make me massively profitable because most of my trades are over 1 to 10 risk reward ratio. So imagine losing 7 and then winning 3 trades that all give me 1 to 10 risk reward ratio. That's 1 to 30. 1 to 30 minus 7, negative 7, I have 23 risk reward ratio in profit. So all I have to do is just continuously execute my strategy because I have the confidence in the strategy that in the long run it's going to work. Because at the end of the day, on a trade by trade basis, no one knows what's going to happen. So if you need more detail, if you need a detailed understanding of the way we trade and everything I've shown you right here, there's a link down in the description. our M&F Mastery course, which comes with lifetime mentorship and lifetime signals. So check it out, for you to be able to get into this particular course right there. You guys, I hope you found value in this video. And if you have, make sure to subscribe, like the video, comment in the comment section, turn on that bell notification so that you get to be notified every time we drop new content. Until next time, goodbye.